The upcoming election is likely to determine whether the current Tax Cut and Jobs Act and tax rates and everything stay the same or sunset and revert back to what they were back in 2017. How do you need to plan ahead? I've got that and more coming up. My name's Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. It is likely going to come down to the election. I'm talking about the current tax rates, the Tax Cut and Jobs Act that was passed in late 2017, went into effect in 2018. And normally what happens when there's these big tax law changes is they say, all right, in order to get this passed, in order to get the votes, we're going to say that these are the new rules. This is the new law of the land for a certain period of time. And it pushes it out a couple of administrations. And listen, if it's a good idea, then out there in the future, we'll prolong it. But if it's a bad idea, it'll just go back to the way it was without anyone needing to do anything. And that's what happened with the Tax Cut and Jobs Act. And right now, the tax cuts, these tax rules are set to sunset at the end of next year. At the end of next year, the tax rates would go back to where they were. And the White House has made it clear that depending on, if they're confident they'll win re-election, that they will not extend the Tax Cut and Jobs Act. They've said that. But they've also said we aren't going to have taxes go up for the average American citizen. I would say you can't do both because setting politics aside, the Tax Cut and Jobs Act was expected to reduce taxes by about $1,000 per kind of middle class person, or a couple thousand for a middle class family. And we do a few thousand tax returns a year. And again, politics aside, that's about what we saw. And so it reduced taxes for the average American. It reduced taxes on businesses as well. Now, who knows if that's actually created more economic growth, but it has reduced taxes. So if Congress doesn't act, and depending on how the election goes, if these tax laws, the Tax Cut and Jobs Act, if it sunsets at the end of next year, what are the 5 big ways you're going to be impacted? First, tax rates and brackets will go back to where they were in 2017, back to where they were in 2017. Right now, the first threshold after your deductions, all of your income minus your deductions, the first threshold is you pay taxes at 10%. And then the next threshold, you pay tax at 12%, then 22, then 24, and so on. Well, back in 2017, it was 10%, then 15%. Then 25%, then 28%. So there's a couple percentage reduction in the actual tax rates that we've seen from 2017 to what we've experienced for the past several years. If the Tax Cut and Jobs Act does sunset and expire at the end of 2025, then starting in 2026, we would have those rates back again. It would go 10% to 15% to 25%. So that would be an increase in the actual tax rates that most of us pay on the first chunk of our income. So that'd be one big change. To the negative, the other big change would be that the standard deduction would revert back to where it was, but then there would be a reintroduction of the personal exemption. Now, this gets a little complicated, but essentially back in 2017 and before, there was a standard deduction of approximately, for a married couple, approximately $12,000, okay, and I'm approximating there. But then for every person in your household, you got about a $4,000 deduction as well. So let's just say married couple, your standard deduction was $12,000, and if there were 2 people, you and your spouse, that you could claim, then there was another $8,000 of deduction there. So $20,000 total or so was your overall deduction. When they passed the Tax Cut and Jobs Act in 2018, those personal exemptions went away. And so now if you have a small family, big family, doesn't matter, all that went away, but the standard deduction was essentially doubled. And so it went from 12 to approximately 24. It's now near $30,000. So it's continued to rise. This, if the Tax Cut and Jobs Act expires and sunsets starting in 2026, the standard deduction would go back to about 12 grand. From about 30 grand, it would go back to 12, but then those personal exemptions would come back. But depending on the size of your family, for the average American household, this would be a reduction in the overall deductions that you get. So that would also yield potentially more tax. Now, the flip is the third change, and that is the standard deduction would also revert back to where it was prior to the Tax Cut and Jobs Act. And this is the one that gets a lot of people fired up. The ones that don't like the Tax Cut and Jobs Act is likely you're in a state or an area that has either high state taxes or high property taxes. Because if you add up certain categories of deductions and that's higher than the standard deduction, then you can itemize. You can add up that total. Well, one of those things that you can itemize is state and local property taxes that you pay. But the Tax Cut and Jobs Act put a $10,000 cap on those state and local taxes that you actually get a deduction from on your federal tax return. And so for many folks, even though, property taxes have been going up and all of that, for many folks, even if you hit this cap, you still were better off and paid less tax. However, it has been a challenge. If the Tax Cut and Jobs Act does sunset and tax rates and all the tax rules go back to where they were in 2017, then there would no longer be this state and local tax cap of 10 grand. And therefore, and because, like I said before, the standard deduction would get cut in half or go back to where it was, so even more than cut in half, there would be a lot more people itemizing, making their taxes more complicated, making their taxes more challenging to prepare, costly to prepare. But if you did itemize, there'd no longer be this $10,000 cap on your state and local deductions. This one, I would say, could be a positive depending on where you live and your overall situation. The fourth big change, and this is a biggie to me. I got 3 kids, and that is the child tax credit would also revert back to where it was. And guys, this one often gets overlooked. But again, setting politics aside, if we're just looking at, what the Tax Cut and Jobs Act aimed to do, which was lower taxes for the average American family and citizens, and reduce taxes on corporations. The average family has a couple of kids. And so the Tax Cut and Jobs Act moved the child tax credit from $1,000 per child to $2,000 per child. So it doubled it. And it moved the individuals that are eligible to receive that tax credit, moved it from, an income threshold of $110,000 or below, moved it to $400,000 and below. So expanded the number of people who are able to receive it. If the Tax Cut and Jobs Act, if the current tax cuts expire at the end of next year, the child tax credit would go back to where it was, getting cut in half, going from $2,000 back to $1,000 per child. And that phase out, the income limit, the income that you'd have to be below in order to receive it, would revert back to $110,000 for a married couple. This further, if your income's above that, then you would start losing some of that child tax credit, potentially having it go away completely. And then the final big change, if the current tax cuts do sunset, is that the corporate tax rate would revert back to where it was. So go back to 35%, it's currently 21%, so big hit to corporate America and businesses. And then the qualified business income deduction on pass-through businesses, pass-through entities, small businesses, that would go away as well. And so increasing taxes, let's just say, on businesses and small business owners. So here's the thing, if you add that all up, depending on your situation, where you live, your income situation, your financial situation, I think many people will see their taxes go up considerably, a few $1,000s, maybe even more, if the Tax Cut and Jobs Act does sunset. Now, the White House, and again, we've got an election that stands between, that's going to determine what happens with this, but the White House is saying, we're not going to extend, that we're going to let them sunset, but tax rates won't go up for people making below, I think they said $400,000. So what's likely to be the case, if the current administration stays as is, likely there'd be a new tax law that is created to extend some of the features of the Tax Cut and Jobs Act. I don't know if they'd have enough time to get this done. So likely likely there'd be political crossfire and all of us citizens would be caught in the middle of that. So what can you do? This is uncertain, it's out of your control, and so plan ahead. Work with your certified financial planner, do proactive tax planning, see if there's anything that you should be doing right now, starting to contribute to Roth, do some Roth conversions, not to plan for the certainty that the Tax Cuts and Jobs Act will sunset, but for the awareness or the possibility should it influence some of your planning. Do you need to update your budget just in case tax rates do go up or taxes do go up, you have less take home? Do you have the right margin available to you as well? So work with your certified financial planner on that. If you don't have a CFP on your team, you can contact one on my team. Find us online, Korhorn.com. That's Korhorn with K, wisemoneyshow.com. You can find us there as well. Or give us a call, 574-247-5898. All right, there you have it. Go on and take your next wise step in your financial life.